Welcome into Laying Down the Law. It is presented by the Orlando Law Group. Keep in mind the answers given on this show do not constitute as legal advice and do not create an attorney-client relationship. For legal advice, call the Orlando Law Group's office at 407-512-4394. That's 407-512-4394 or online at theorlandolawgroup.com. That is theorlandolawgroup.com. I'm Nick Grunowitz. Jennifer Englert is with me, as she is every single week here on the show. She is the legal professional. I'm just the guy that introduces Jennifer, that is, and then Jennifer takes care of all the smart stuff from there. Jennifer, we have Sonia.
Not true.
A little bit. Like I get to play the role of the hey, I don't understand this guy, which is I was made for that role, Jennifer. So it's perfect for me. We have Sonia Narvaez joining us again, as she did last week, and we're going to kind of talk about some of the tax topics when it comes to businesses. We talked a little bit more on the personal side. So let's get Sonia back in here on the show, and I know that we want to get to some of those business questions, don't we, Jennifer?
Yes, we do. That's our present to tell people how to save on their taxes for 2021, because who wants to spend any more money from 2020 on taxes than we have to?
And I guess we should say Happy New Year, too, I guess, as this is now our first show of the new year as well. So, Sonia, we appreciate you coming on back and joining us here again. Thank you. Before we get started on some of these business topics, do you mind just reintroducing yourself again for those that maybe did not catch your introduction last week?
Absolutely. Happy New Year, guys. Thank you. My name is Sonia Narvaez. I'm a CPA. I am with CPA Accounting and Tax Services. We're in the Orlando area for the last 22 years, roughly, and look forward to having this show about businesses. 22
years, and if there was ever a time for businesses to get some of their questions asked, it's the beginning of this year after a tough 2020. Where did you want to start, Jennifer?
Sonia, I guess for businesses, I know we talked a little bit about CARES Act and what it did for individuals. Are there any tips for businesses that we should talk about before we move on to just kind of like more normal tax topics that we would talk about at any time? What's the top tips that people should be thinking about based upon things that the CARES Act or the stimulus has provided to them?
Sure. Well, for businesses with employees, one of the things that I definitely want to point out is, not that I recommend, but sometimes these things are needed. And one of them is the deferment of payroll taxes. So basically, you're able to defer the employer portion of payroll taxes, about 6.2%. So your portion that you match for the employee, and you're able to pay 50% of this by the end of 2021 and the other 50% by the end of 2022. Depending on the number of employees, this could be a decent amount of money that you may need to have in your business. You are responsible. Payroll taxes are also one of those that you want to remember. You could become personally liable. And very important. If you absolutely need to do something like this, do it. Just remember, please do pay for it. The IRS literally goes after individual Social Security who do not pay the payroll taxes of their employees. Even after they retire, they go after them. They're not that easy to get away from. So keep that in mind. And I do want to point out there is, if you have employees who are having to take care of people with COVID, like whether it's a child, a parent, a family member, somebody who they live with, they actually have you will have a credit. It's the Sick Family Leave Act that you, under this CARES Act, that you will be able to get a credit for paying these people, and you can pay them. I think the credit is a maximum of about $2,000, and they can get their max pay, and you cannot pay them over $5,100. But it's good to remember, you may have a good employee, somebody you really, really want to, but it's hard sometimes to pay them. There will be a credit that you will be able to take advantage of if you have to pay them while they're taking care of someone. Plus, I think you have to.
Do do people have to prove that they're actually taking care of their relative? I hate to be that person, but do they have to prove it to the business, or does the business have to prove it, or as long as they say that's what they're doing, is that enough?
Well, I totally understand where you're coming from. If I was in business, I'd ask proof. And if you're going to get a credit and you get audited, I mean, anybody could decide to want to get all these credits. So how are you going to back up your claim? So definitely get proof from the employee, and as simple as a COVID test from the person you're taking care of, family member. And if there's any question as whether they live with you because there's not the same last name, they're not somewhat related, you may want to get other proof. Again, addresses, bills, things that go to your house that show that that person lives with you. And hopefully it's not just in the last month, but that can happen. So,
right, especially if they lost their job or they are sick and had nowhere else to go, or their college or your older kids or anything.
Yes, exactly. That can happen. But secure yourself, especially as a business owner. You just never know. And you could end up, you don't want to give a free vacation and then end up getting audited and having to pay for it twice.
And I mean, getting back to the payroll tax thing, because I know as a business owner, I even thought, I looked at doing that. It seems like it's a pretty complicated thing. Like, for example, if the person quits in between, like say they quit while you're deferring their payroll taxes, is it basically a tax bill that you just have to go back and pay, and it doesn't really matter if the people still work for you or not? How complicated is it going to be to actually defer that tax amount, know how much it is, and pay it back?
Okay, for the payroll tax deferment, it is probably being, we haven't done too many of these, so it's very new. So bear with me. The 941 is pretty much what we're going to do, the deferment of the taxes of the actual employees that have worked for you. Then it'll be established as to the amount every quarter. So if someone leaves, that's not too much of a problem, because there will be no more debt, and it will be established as of the particular quarter as we file the quarterly reports for employees.
And if somebody does forget to pay or doesn't have the money to pay, and that's like the corner they cut, I've helped clients with this, and I know it's not the corner to cut, because the IRS comes after you even personally, even if it's a corporation. What's the best thing a business can do if they owe payroll taxes and they just don't know how to proceed forward?
Okay, payroll taxes, do not let them accumulate. Pay them whichever way you can try to. And if push comes to shove, cut your workforce. Do not let those payroll taxes accumulate. If they start accumulating, stop. You got to stop. It's going to get dangerous. It's going to get in a dangerous area. Payroll taxes are not easy to get away from, as you know.
Right. And as an accountant, do you help people at least try to negotiate that out or make a payment plan? Or is it possible to be able to do at least payment plans and things for them?
Absolutely. We can work it out. We can try to find a way to get those payroll taxes in. Whether it's an installment plan, yes, all of that can be done. I just always say they really accumulate very fast.
Okay, yeah, people, when they get into trouble, sometimes they like to try to ignore the situation. That's just never the right thing to do, but no. Especially in this case.
Yeah, the IRS sends notices, and they'll have different CP and a number, and always answer them, always answer them. Absolutely.
Getting back to anything that a business can take advantage of that either the stimulus or the CARES Act provided that we haven't talked about yet?
There's one last thing to point out. There's the employee retention credit, which is something similar to this, that you can basically get up to. You can basically get a credit of 50% of the employee wages, including healthcare expenses. And this is if the business suffered at least 50% in drop in gross receipts in a particular quarter compared to the same quarter of a year before. So you cannot receive this credit if you received a PPP loan. But it's something to think about for those businesses that really did badly and did not qualify for a loan at one point, or did not get the PPP loan. So you do get a 50% credit.
Oh, okay. So is that something that could potentially help small companies that didn't do the PPP loan, or people who are sort of self-employed? Can they use that, or is it for only W-2 wage employees?
W-2 wage employees is mainly what the PPP and these apply to.
Okay, but yeah, if you were afraid to apply for a PPP loan or whatever, that's a good point. Speaking of PPP loans, I feel like people know this, but I'm sure a lot of people don't. Assuming that money, I mean, a lot of us businesses have it and we're in the process of trying to get it forgiven, but I don't think very few people are going to know whether that actually gets forgiven before the end of the year. What is your advice about like kind of how to deal with that?
That's a very good question. We unless it gets forgiven, it sits on your books as a loan, as an outstanding loan until we get that. Once we get that, then it'll basically be reversed. And there's still a lot of questions as to whether you're going to be able to use like, for example, you normally use those expenses as, you can write those expenses. The IRS, as of right now, has said that they are not going to allow the payroll for which the PPP paid for and the expenses for which the PPP paid for to be written off. So basically, it has to sit as a loan on the books. And then once that finally becomes forgivable, then you will have to adjust your books accordingly. So if it's not given to you in 2020, it just sits there as a loan until 2021. You get to write off the expenses this year. Once 2021 is forgiven, then at that point you would not recognize the expenses. You would have to do a reversal.
You're listening to Laying Down the Law, presented by the Orlando Law Group. The answers given on this show do not constitute as legal advice and do not create an attorney-client relationship. For legal advice, you can call the Orlando Law Group's office at 407-512-4394. That's 407-512-4394. More with our guest, Sonia Narvaez, President and CEO at CPA and Accounting Tax Services, over 20 years right here in Orlando. Coming up after the three big things you need to know right here on WDBO.